the dual-track system of market price and planned price, but a split strategy of opening prices while providing targeted subsidies. Although the relevant departments are still hanging on CPI and extremely sensitive to indicators, the use of administrative force to force down prices has gradually been falsified by the market, and all parties are forced to accept reality through market lessons. It will be a matter of time before prices are relaxed. But this is not to say that opening up is as simple as opening up. It requires the maturity of various conditions such as timing, policies, and situation. This will be a gradual process. Considering the affordability of society, relevant parties are likely to adjust the pace and speed of price liberalization with changes in the situation, giving society enough time and space to transform and digest. At the same time, liberalizing prices does not mean that the government will let go. Regulation can still affect prices, but the methods have changed. It is no longer administrative control, but indirectly affects prices by influencing market supply and demand, such as the rice bag, the Gettable Basket project, or price adjustment funds. So the crux of the problem lies not in opening up prices, but in how to maintain social stability. Looking at the impact of reform, the most likely impact is on the price-sensitive vulnerable groups. In order to stabilize people, ease hearts and promote reform, the government's bottom-up targeted subsidies may become a protective cushion for the gradual liberalization of resource prices in the future. This turns the key question to how to target subsidies, whether directly or indirectly. The reason why education reform and healthcare reform are in a dilemma is because relevant parties attempt to reduce the burden on the public through indirect subsidies from institutions, schools, hospitals, etc. The starting point is correct, but subsidy institutions are prone to rent-seeking and corrupt, but they cannot effectively compensate. Therefore, indirect compensation is better than direct compensation. The focus of future subsidies is likely to shift from subsidizing hospitals and schools to directly subsidizing patients, impoverished students, and the poor with quasi-currencies such as medical vouchers, education vouchers, and food vouchers. On the other hand, the operating mechanism of subsidies precisely involves the sensitive core of structural reform. Indirect compensation and direct compensation will originate from two different power operations. The former requires the separation of the linear functions of the administrative department from the powers directly under the state, while the latter requires research on the separation of decision-making and administrative execution. It is difficult to truly achieve separation in the short term. It may be a long-term trend towards future policy goals. But under the pressure of the situation, strengthening the power of the United States and Britain monopolize the forefront of financial civilization in today's world. The United States and Britain have taken the lead in entering the financial civilization, and each has its own expression of financial civilization. The financial civilization of the UK is a classic conservative model, mainly banking and insurance, which effectively helped the Industrial Revolution and trade development of the UK avoid risks. The financial civilization of the United States is mainly represented by the investment model, represented by the stock market and derivative markets. It conforms to the speculative nature of Americans, helps the United States successfully complete the main stages of industrial civilization, such as Western development, railway construction, and canal construction, and quickly enters the new economic civilization from industrial civilization. In addition to having financial civilizations that adapt to their respective national conditions and characteristics, the financial civilization of the United States and Britain has also become a strategic point for them to control the world. National strategic means such as controlling the international banking system, controlling the global hard currency, and mastering the international capital market ensure that the financial civilization of the United States and Britain takes the lead. From a deep analysis, there are three more reasons. Firstly, the financial surplus in the United States and Britain was the earliest and most severe, and the detachment of the virtual and real economy was the most thorough. In recent years, worldwide financial assets are rapidly rising in multiples, with the United States alone accounting for 1/3 of the global financial scale. Using the stock market for example, the market capitalization of the US and UK stock markets accounts for up 2% of GDP. When the financial surplus reaches a certain level, the virtual economy exists independently of the real economy. Currently, the size of the virtual economy in the United States is more than times that of China, and the size of the virtual economy in the UK is also more than times larger than that of China. Nowadays, global foreign exchange transactions have basically deviated from the operation of the real economy. Among the daily transactions of $1 trillion do not have any trade or production background, purely for the sake of profit-seeking needs of funds. The operation of this part of the virtual economy follows its own laws, such as high vulnerability, conceptual pricing, etc., fully reflecting the game rules of financial civilization, which are completely different from the game rules of industrial civilization. The detachment of excess financial capital from the virtual and real economy provides a prerequisite for the formation of financial civilization. Secondly, the financial national strategy is the most prosperous. There have always been rumors of American conspiracy theory in the financial market. For example, the United States wants to force the RMB to appreciate, just like Japanese asset price bubble in that year, and let China's economy fall into recession. The Southeast Asian financial crisis is believed to be largely due to the financial conspiracy of the UK. The UK used international speculators to destroy the Hong Kong economy, allowing the Chinese government to take over a mess like Hong Kong, while the US cooperated with its actions to profit from it. No matter whether the conspiracy theory is established or not, finance has actually been regarded as an important means of national strategy by the United States and Britain. They are controlling the redistribution of global resources by financial means, such as using finance to control the world's agricultural civilization and industrial civilization. The prices of agricultural products, energy, and resources are all controlled by the futures market. In addition to being regarded as a national policy measure, finance itself has also become an end, such as the United States launching the Kosovo War to prevent the return of European financial capital and blow up the euro. The organic combination of political deception, military strikes, and financial gain has become a common national policy in the United States and Britain. From this it can be seen that financial civilization not only has economic significance in the United States and Britain, but also has significant political significance value. Thirdly, the logical deferral of the industrial economy is the most classic there. The rise of the old financial industry in the UK as a result of the Industrial Revolution, raising funds and taking on risks, have supported huge investments in transportation, energy, raw materials, infrastructure, and other aspects, promoting manual production to fully enter the industrial civilization era of large-scale machine production. The Dow Jones stock market in the United States provided the main financial driving force for the development of industrial civilization. Through the listing of enterprises, a bridge was built between industrial civilization and financial civilization. For example, the compensation of company executives was changed from the payment law of industrial civilization to the payment law of financial civilization, which instantly magnified the hard work and linear accumulation of company executives in the stock market. And the Nasdaq stock market plays a bridging role in the grafting of new economic civilization and financial civilization, using the interests and rules of financial civilization to stimulate Americans' innovation enthusiasm, which in turn promotes the development of new economic civilization. The financial civilization itself is also undergoing mutation and development, especially in the past years, where the world's finance has been changing and unpredictable against the backdrop of the lingering capital. Financial civilization is increasingly showing its power. First of all, financial civilization gradually transcends industrial civilization, and its laws are completely different from the law of value of industrial civilization. When financial civilization knocks at the door, many people familiar with the laws of traditional industrial civilization are realize later and use the wrong rules of industrial civilization to calculate the result, missed out on the benefits bestowed by financial civilization. LTCM, a hedge fund company managed by Nobel laureates who are proficient in the most complex risk products and models, fell on the eve of financial civilization, and billion arbitrage funds were wiped out. When the British Chancellor of the Exchequer was about to rise in the price of gold, he mistakenly estimated the situation and left more than half of Britain's gold reserve at the lowest point in years, which caused the British government to lose at least £1 billion. Leading the Parliament to ask him to settle accounts in the autumn. Secondly, Financial civilization has high requirements for the quality of other civilizations grafted onto it. If they can match each other, it will have a significant amplification effect on the achievements of other civilizations. Otherwise, reverse results will occur. In Former British Prime Minister Thatcher keenly seized the key to the financial explosion and implemented a major transformation of the securities market, creating a new City of London and ushering in a new era of British finance. On the contrary, the Japanese version of the financial explosion backfired, not only failing to unleash vitality in Japanese finance, but also plunging it into numerous crises. The root cause is a lack of understanding of the special laws of financial civilization. Currently, a new wave of financial civilization is quietly hitting the Asian coast. But the panic of the financial crisis, these old experiences have deeply rooted in people's hearts, making people from all walks of life afraid of what is about to happen. Southeast Asian countries that have experienced the financial crisis are typical representatives, and they have strong vigilance against the current global liquidity surplus and asset price rise. Many countries have already started deploying in late and early such as Vietnam, the Philippines, Thailand, India, etc., which have strengthened financial regulations in advance. In order to mitigate the risk of capital flight, Thailand even resorted to government intervention, which was counterproductive. While opposition to free currency floating suddenly became popular in countries such as India, emphasizing the government's control over currency flow, which became the mainstream opinion in academia, and most mathematicians were still advocating for free currency floating before this. At the same time, discussions about the financial explosion in China are also on the rise, with the mainstream view that China is at the center of the vortex and has a high probability of crisis. They are worried that China will be blown up and then destroyed. In fact, the current situation of China's finance is more aptly described as the financial explosion because it represents a long-awaited energy, and the process of ultimately entering the financial explosion can be controlled by the government. In the absence of a sound financial system in China, relevant departments will not easily loosen financial regulations. As a result, China's financial civilization will transition from the financial explosion to a controlled explosion. From the perspective of Chinese reality, industrial civilization and agricultural civilization are still ongoing, and information civilization is beginning to emerge. The financial industry, on the other hand, belongs to the model of strict national regulation and a conservative approach. At this moment, entering the financial civilization still requires several hurdles. The first is the effective grafting of financial civilization with industrial civilization, agricultural civilization, and information civilization. As China's economic development mainly depends on backward state-owned enterprises, the traditional economy civilization dominated by these state-owned enterprises is likely to be magnified in the financial civilization, and finally destroyed by the financial civilization. Once the country liberalized the private economy and the innovation vitality of the whole society, it is likely to enter a benign interaction state of the four civilizations. The second is the level of understanding of the game rules of financial civilization by relevant parties, and the degree of subversion of the wisdom of industrial civilization. For example, many experts believe that the phenomenon of nationwide stock trading is abnormal and a signal of the stock market reaching its peak, while officials from the State-Owned Assets Supervision and Administration Commission believe that nationwide stock trading is a great thing due to our limited knowledge. It is difficult to grasp it clearly within a limited time frame, regardless of the purpose for which this statement is made. At least it indicates that the management still allows room for discussion on new phenomena, rather than blindly denying them. China's hybrid finance effectively balances tolerance and control, and may dominate the next wave of financial civilization. China's closely following is not voluntary. The evolution of history has never been dominated by a single force, but rather the result of multiple factors intertwined and combined, as in the frenzy in the Chinese stock market that lasted for over a year between and is generally believed to be driven by multiple factors such as China's economy entering a take-off period, unexpected growth in corporate investment returns, successful stock reform, a surge in foreign exchange reserves caused by foreign trade surplus, and the influx of hot money and liquidity flooding used by the appreciation of the RMB. These reasons do indeed exist, but Foucault believes that these are only superficial and visible reasons. And in addition, they are also the fate of financial civilization. Originally the replacement of one new civilization with another old civilization meant a change in the original way of life and values. The countries or regions that first entered the new civilization will undoubtedly become the setters of new game rules and leaders of life changes due to the disruption of existing game rules. For example, the UK, which first entered the industrial civilization, and the United States, which first led the new economic civilization, not only won the highest end of the main industrial chains manufacturing IT of various civilizations, but also made most developing countries follow their management concepts and development models. However, being able to enter a new civilization is indeed a fate and a natural result of various conditions. Now, under the condition of having the most, the United States and the United States have taken the lead in monopolizing the financial civilization. On the other hand, China clearly does not have the mature conditions to control financial civilization, but the objective existence of Chinese characteristics in the following aspects may be driving China unconsciously to follow closely into the door of financial civilization. Firstly, why China has objectively become the most open system. According to statistics from the Ministry of Commerce, as of China, a total of foreign invested enterprises have been approved for establishment, with an actual amount of foreign investment of billion US dollars. In terms of rate, the proportion of foreign investment stock to China's GDP was percent, higher than the global average of %. However, China's opening up to foreign capital is receiving risk education due to the structural transformation of foreign capital itself. Foreign capital is increasingly entering in the form of financial capital, leveraging China's vast resources in an asymmetric way of currency symbol that come and go freely. And for Liang Shift 1000 in foreign investment continuously acquired the equity of Chinese steel.